sound of an American oil company hard at work. Want to be a part of it? Listen up. Hello.
It's 9 a.m. in Shanghai, Shenzhen, and here in Hong Kong. The China Show. I'm Annabelle Rulers with David Ingles.
Happy Friday and good morning to all of you. We're counting down to the open markets in Greater China. But let's get to your top stories today. President Trump is expected to announce finally his Fed chair nominee on Friday, saying his pick will not be too surprising.
Asian stocks and U.S. futures under pressure as traders digest big tech earnings, with Apple's warning about rising costs weighing on sentiment.
Now, the company, however, delivering record quarterly sales driven by strong iPhone demand, services growth, and a rebound in the Chinese market.
Also ahead, President Xi hails ties with the UK during Keir Starmer's visit and pledges to grant British tourists visa-free entry.
And a Bloomberg scoop, Blackstone is in advanced talks to become the single largest shareholder of struggling Hong Kong developer, New World. Good morning. Happy Friday. Welcome to the show. Lots to discuss as we kick off the final one of the week, final show of the week. So a couple of things on deck. Of course, Donald Trump was speaking about an hour or so back. He touched on many things, which is not surprising, but I think maybe of the immediate consequence of the markets is Iran. He's sending a group there, he says, and of course, as it pertains to the Fed pick, we'll find out very soon, I think.
We're actually going to, his nominee, so he's saying he's going to announce that Friday morning, that's US time, of course, our Friday evening here in Asia. That's right, you have got
yes.
An early test for me. But Kevin Walsh is certainly the one that could be the pick, and I think it's a really interesting one because he's someone who has in some ways a CV that resembles Jay Powell to an extent. I mean, they were both lawyers that worked on Wall Street, both worked as Fed governors as well. So in some senses there are similarities, but at the same time, it's interesting. In his time as Fed governor, he was actually someone who leaned more hawkish and showed really little tolerance for inflation.
Yeah, I mean, the only clue we got from the president, actually, I wouldn't even call it a clue, it's more a description. It doesn't really answer the question. I'm thinking about it back. It's known to everybody in the financial world is how he's described it too. So anyway, we'll see what the name looks like, and of course that's the nominee because he has to go through, of course, the process of in terms of being approved. The other story we're tracking today, obviously tech earnings, right? So we have this whole flurry yesterday, this time, and of course overnight it was really Apple and what they said about the iPhone record sales there. The Chinese market coming back, I think, the first time in 3 years.
Yeah, really strong for the Chinese market. I think it's interesting as well. Citi has downgraded their forecast or price target on Xiaomi stocks as well, and that's partly down to that slowing smartphone. But Apple actually performed well, and it is really coming down to its iPhone releases. It seems to have captivated a lot of attention from consumers and really good holiday spending. Concerns about the memory chip slump, but didn't really see it in the current quarter. They're saying we're more going to see that actually moving into 2026.
Okay, yeah, I think it underscores too. It's been very difficult to impress this market, right? Particularly for these large caps. It's not. We haven't seen big declines across all. We've seen declines across most, and I think the reason I bring that up, it's the final trading session of the month, and we are set for a third straight monthly underperformance of the S&P equal weight relative to the S&P, the regular index, of course, which underscores not so much the rotation, but it's the broadening out of the rally, and of course, we're still trading fairly high levels in price. That is also just to say silently two other things. Obviously, silver is not being so silent. Crude prices have crept up, right? 5 or 6 straight weeks. And of course, also Hong Kong, actually. The Hang Seng Index is now on the cusp of 28,000 for the first time since 2021. So we'll see how everything plays out across these markets. As we get into Friday, the state of play across equity markets is this. NASDAQ futures are off 0.4%. We have Taiwan coming online, reflecting perhaps what Bell was talking about there on the Xiaomi and Apple overlaid as 0.6% on the downside. Kospi, though, I mean, what's new? This has always been mostly green so far. I would say mostly daily. Last month and a half here. Let's have a look at the dollar and how we're tracking there. We are set for the second straight weekly drop. Not just any weekly drop, of course, steep weekly drops, plural there on the US dollar. We'll unpack, of course, the trip, Keir Starmer, of course, in China and sort of what's that's unlocked so far. We talked about The commodity stories of Brent, 70 for the first time in several months. You have copper, we touched 14,000. That was the big story. We'll look at the copper contract, obviously, when things get underway here in Greater China in a couple of minutes. Gold and silver on your screens. A50 futures coming up very, very shortly. There we go. The oil contract is up 3%. Dollar China 6.95. And of course, among many other things, I think in terms of earnings, we have Hang Lung reporting earnings today. But yes, it's all about big tech.
It is all about big tech, and it's all about Apple in the session today as well, because we had those earnings coming out in the last couple of hours. As you said, it was an upbeat forecast, of course, concerns around memory chip prices. What does that mean for margins for the business moving forward? But just taking a look at some of the supplies in the region, and well, the surprise really is seeing Samsung, of course, after those blockbuster numbers yesterday. And again, a key beneficiary out of those rising memory chip prices, but otherwise a little bit under pressure this morning. Let's bring in our
Match with a local TurboTax expert at our new in-person locations. They're specialized in your unique tax situation.
Let's bring in our managing editor for Consumer Tech, Mark Gurman, joining us this morning. So, Mark, of course, you know Apple better than anyone else at Bloomberg. So, what was the most important takeaway from you from the numbers?
Biggest takeaway is they absolutely killed it. Okay. $144 billion quarter. It's unbelievable. It's their first $25 billion quarter in Greater China in 4 years. The iPhone number hit 85 billion. Services topped 30 billion. It's quite remarkable. Services were flat compared to the Wall Street estimate, but still that was pretty damn good. The Mac and wearables, home and accessories both saw some declines, but you know what? The iPhone number was so strong, it really doesn't matter. The China number was so strong, it really doesn't matter. What this means, they now have some air cover, right? They have support from Wall Street because of these financials to get a little bit more time to get their act together on AI. I still think Apple's facing an existential AI crisis. They're not an AI company. They're not run by AI people. They're still the worst in the industry when it comes to AI. But if you're selling iPhones like this, at least for now, it doesn't matter. But that doesn't mean it's not going to matter. It matters soon. So they shouldn't be resting on their laurels here. I don't think they are.
Mark, I mean, give us an update too, if you could, on overseas markets and whether to just borrow the concept you just mentioned there. You know, other markets will also help, or give them more time as they figure out the AI story, Mark.
China's great, India's great, Korea seems great, Brazil, they shouted out even in terms of Mac sales, they did decent in Europe. But yeah, they really need to figure out this AI situation. You know, Tim Cook has been an executor of, the Steve Jobs roadmap for the few years after Steve Jobs passed away. He's able to widen Apple's product portfolio, but there's really been nothing in terms of major new things concocted under Cook that have become a success. The car never came to market. The TV set never came to market. The Vision Pro is a complete failure. They're going to need to come up with some new things, and especially built around an AI ecosystem. They have not proved an ability to do so, but we'll see what happens the next couple of years. The roadmap is quite strong. The other question long-term is on succession, right? Will Tim Cook have the right person to replace him at some point? I still think it'll be the hardware chief. But these are all questions that are going to need to get answered. But fortunately for them, they just bought themselves a lot more time.
Mark, really great insights there. That was our reporter there for Apple, Mark Gurman in Los Angeles. And joining us now is Harold Vanderland. He's head of Asia Pacific Equity Strategy at HSBC. And great to see you again at the start of the year. So let's just kick off on that tech story. I know that this is the year that you're going to be looking beyond the AI rally, but at least in the near term.
At the moment, no need for that.
Yeah, it's hard to ignore.
It's hard to ignore. No, absolutely. So this is the only story in the region. Maybe China is a story as well, but it's basically the only story. We said at the beginning of the year there will be, in this year, we're going to also have to look beyond, because India is maybe recovering and maybe something in Asia, but that's not really happening at the moment. So the story remains a Northeast Asian story, a North Asia story, right? Korea, Taiwan, shortages in tech, stocks very strong, earnings upgrades in these markets, absolutely. That's
our starting point in Korea, just to zero in on that market.
Yeah.
Value, I mean, the discounts clearly disappeared, the Korea discount. What does the earnings story look like? Do you think it will justify a further re-rating?
The earnings story is very strong. I mean, look at how Korea it's performed. If you look at the valuations of the market, it's moved up a little bit, not so much because the earnings have gone up so much as well. And what we now see in terms of positioning is that people have already got a lot of exposure in Taiwan. They can't really buy that much more because if you can't have an Asian portfolio with only one stock in it in Taiwan. So exactly. So actually, as that market continues to perform, you see that people actually have to sell. So they try to build an exposure somewhere else, and that's helping Korea as well. So you see them rotating into Samsung, Hynix, these stocks, of course. And there is still room for that to grow. Global funds are coming in as well. You just mentioned earlier on, there's a bit of rotation in the US market. So you see that they're looking for a kind of AI place outside of the US now. And then Korea is your obvious choice then. Yeah.
So you think this is the year that Korea really just continues to be the standout in the Asian region, or are you looking at other markets as well? Of course, there's Japan, or there's Taiwan, Hong Kong. Which one do you think is going to be the biggest beneficiary, I guess, of that rotation away?
If there's a rotation, I think there's some interesting things happening in China. There are interesting things happening in India, but it's slow and it's not so visible yet. So that might well be a story that just takes time before the earnings are recovering there. There's a bit more stimulus has taken place. So it looks like the earnings story is picking up in India, but it's very slow. So at the moment, it's not something that gets a lot of attention. So that might be something that happens in the next quarter or so. But we also see money coming back into China. That's interesting. And this is not mainland Chinese money. That was the main driver for last year. But we actually see money coming from Europe and also from the US. And in particular from the US, that's not something we've seen over the last couple of years, but they're starting to go back into Chinese stocks as well.
And do you get a sense that will continue? Because that was for many years potentially the incremental buyer of this Chinese market. We're underweight China. We've been massively still underweight when you look at the positioning, right? I want to get a sense based on your conversations.
I mean, you're absolutely right. 2 years ago, I think we actually spoke about this once. Everybody said, "Oh, it's about Asia ex-China or emerging markets ex-China." That story is gone. A lot of US funds said, "No, we're not going to buy China. There's no interest in this whatsoever. Difficult to sell." But now we have a different dynamic. We have a weaker dollar, so you want non-US assets. Europe is already they went last year into Europe. Right. Now they're looking somewhere else. Emerging markets shows up, and then you need to find markets where there's a good growth story. Just spoke about Korea, but China things are picking up as well. Look at the Apple results, right? That gives another confidence. Hey, there is something going on there. The market has performed pretty well last year, so I think interest is starting to come back in. Do you think the formula for China this year will be what worked last year, which is your platform companies, some of the financials on income and dividends, and I think materials did quite well? Or is there a cyclical story, a rebound that we might be sleeping on? I think there will be a bit of a cyclical story. I think. Okay. So the interest is, to a large extent, has been in dividend yielding stock, sort of safe investments, and this is mainland Chinese buying Chinese stocks initially in Hong Kong, then they went to the Asia market later on, and they bought Bank of China and these sort of companies gave you a good yield. Very safe sort of investment. What we now see is interest going into other sectors. So AI, China AI, biotech is coming up quite often. And then you have these other sort of sectors that do pretty well. Power equipment is doing very well because you're building out all sorts of networks in China, so you need that. So there are these industries where there is no oversupply, where things are happening, and this is where the focus is shifting in that direction as well.
The IPO pipeline, though, in Hong Kong is still very robust coming into...
Robust is an understatement. It's very strong.
Well, it's very strong. Yeah. And I'm wondering if you think that there's any concerns about liquidity being drained from the secondary market on that basis. Mm-hmm.
Yeah, we have, last time we looked, 360 IPOs in the pipeline. So that's a lot. And some of them are big, some of them are smaller companies as well. There's a lot of these AI companies that need capital, so they're listing. There is a lot of, as I said, there's the Chinese local money, mainland Chinese money coming into Hong Kong. You now have foreign money coming there as well. So there's a lot of liquidity around. So I'm not worried that will drain money out of the secondary market. It might happen from 1 week to another if there's a real big IPO, but not structurally so. At least not at the moment. If that would happen, though, let's say it's difficult to sell your IPO, you got to lower your price, then you see that 360 number probably goes lower. Because then some companies might say, let's wait until the market's a bit stronger. So that's a moving target as well. But I'm not overly worried. The liquidity is really good.
Key to the liquidity issue formula will be the Fed. We heard from the U.S. president earlier. I want to play it out for our viewers, and we'll talk about it soon. Let's play it out, guys, please.
Steven, this credit improvement success rate by Credit Karma is stunning.
Oh yeah, it's an elegant way to show you use Credit Karma to learn about the factors affecting your credit and how to get your scores from there to there. Ooh. Download Intuit Credit Karma for free and start successorizing your credit today.
Five positions on Pro Football Playoffs and the Pro Football Championship with Robinhood. Download Robinhood.
What day will you be announcing your venture next week?
Tomorrow morning.
Tomorrow morning. What day will you be announcing your venture next week?
Tomorrow morning.
Tomorrow morning. And do you mention
I'd rather say it tomorrow, but just an outstanding person and a person that won't be too surprising to people. It's going to be somebody that is very respected, somebody that's known to everybody in the financial world, and I think it's going to be a very good choice. I hope so. I mean,
Someone was on your short list, sir?
On my reasonably short list, yeah.
So, Harold, Kevin Hassett, Chris Waller, Kevin Warsh, Rick Ryder. Does it matter who among the four eventually gets?
No, this is an important position, so it matters. And in conversations that we have with clients, it comes up who it might be. I mean, we don't know it, so everybody's second guessing. But it does matter because we need the independence of the Fed. That's really important. We're also in a strange situation whereby we now actually see that inflationary pressures remain. The market is saying, in the beginning of the year as well, there's going to be rate cuts coming through. But increasingly saying, maybe not so much. We actually don't think there will be a rate cut this year. We don't even see a rate cut next year. So there's a bit of a recalibration in the market in the opposite direction even. So you need somebody who can lead an institution, of course, lead it with, and come with credible policies. This is incredibly important. Yes.
Okay. Harold will be staying with us. There's the item of Indonesia, of course, that's emerged this week. It's a big story. We'll talk more with Harold in a moment on that. I was looking at my Bloomberg screens, and I was wondering why we weren't getting some ticks on certain assets, and now we know why. Here we go. Breaking news. The London Metal Exchange is said to delay the market. That's what we know so far. I'm just getting you the headline right now. We'll try and understand further, of course, what's going on here. And yes, we'll see what's going on here. Apart from the fact that yes, this is certainly underscored the significance of this. The metals market has been really front and center of our global markets this week so far. So great news so far there. And of course, we also have the fix of the day, which is now up. And I'll tell you what the fix is. The range is from 694 to 19. The reference rate on your screen. So there we go. Thank you so much. 696.78 against the US dollar. 13 minutes of the opening bell. This is the China Show.
Watching the China Show, just getting some more details on that breaking headline just crossed a few minutes ago that the London Metal Exchange is said to be delaying the market opening this morning. We're getting some reasons for that. And what we understand is that technical issues are said to be behind the reason we've got that delayed opening this morning, or said to have that delayed market opening this morning. So yeah, it's a red hot metals market. That's all we can say right now. And of course, bring you more details on this as it comes to hand as well.
Okay, we'll set that aside for now and talk about the other big story, market story to speak here in the Asia Pacific. In fact, just to borrow parts of what Bill just mentioned there, the price fell so much that we had to deal with some trading halts in Jakarta the last 2 days or so. So following what was really just a whirlwind 48 hours, towards the latter part of the session yesterday, and hence we were down as much as 8% at one point. We closed lower by just 1%. Couple of updates coming through out of Indonesia. These promises for reforms, right? The regulator doubling the free float requirement to 15. Danantara coming in and say they're weighing some active markets. Should we call intermittent participation? Okay, sorry, I slipped. And the exchanges eyeing disclosing ownership below 5%. Now, HSBC has just downgraded Indonesia stocks to neutral. Still with us here is Harold van der Linde, head of Asia Pacific Equity Strategy at HSBC. And perhaps I would argue, Harold, and you can disagree with me, you're probably the most familiar with this market among anybody I know. So, do you agree with the description? Give it enough. Okay. Worst over or worst yet to come?
There's a chance for this particular issue that actually for the markets, a lot of the worst is over. What we've seen, initially I was a little bit disappointed with the results that came out of Indonesia. We didn't hear anything. MSCI made a statement and it was really quiet. But yesterday they came out and said, listen, we have a task force. The regulators are going to sit with the stock exchange. We're going to talk with the MSCI. We're going to disclose a lot of this data. So that's good. They're working on this. Just a little bit of history. In actually 2005, I think it was actually the foreign company bought a local company, so one of the cigarette companies. Free float went down, but it was a very large company, so people needed to have it in their portfolio, so in their ETFs, but they couldn't get the stock. So free float became a discussion. Then they said we'll put it at 7.5%. We will raise them, but they never really done this. And I think now with what the MSCI has done, they're now forced to they're going to make more steps. They've said we're going to go to 15%, and for IPOs, there's a higher threshold. So new companies that come in, I believe, have to have a free float over 20%. So they're moving also in the right direction.
Okay.
How confident are you they can meet the timeline? Because I mean, yesterday they were saying it would be possible by March to have enacted a lot of these changes. We know the deadline is May. Do you think it's possible that everything can be done in that sort of time frame?
If you look at the language of the MSCI, it says that we will consider in May. So if Indonesia says, listen, we're going to be really serious on this, but listen, maybe there's a bit more time, I think this will happen. Because the alternative to put Indonesia on the frontier market sort of board is also not reasonable. I mean, it's a large market. It has sufficient amount of liquid stocks. It's some of the largest companies in Southeast Asia are listed in Indonesia. So I think that is not, I think, fitting as well. But in the ball is in the court with the Indonesians. They got to show progress. It looks like they're doing this at the moment. So that's why I said, listen, I think in that respect, I think the worst is over for that.
The others component comes to mind. So whether it's on an index compiler level, do we see other index compilers look at the same thing? They look at different things, of course. So MSCI looks at this. There's another one, of course, that looks at that. Do you think they might be emboldened but do you think this might incentivize them to look at investment criteria and other Southeast Asian markets? Because Indonesia, this is just a feature of Indonesia.
No, that is right. I think there's two things that could happen. One will take maybe a little bit longer. You're right. The other markets, I suspect, will also sit down, or have sat down yesterday in, say, Thailand or the Philippines, say, how is that with us? And where do we stand and what do we need to do? So you would think that they might respond to this as well, or at least investigate where they stand, what the progress is, so that they're not going to be in a similar sort of situation. Because it creates a lot of volatility and has impact on currencies and these sort of things. That's the first thing. That would be good, because I think free float increases would be good.
Yeah.
The second thing is, it's very nice to say, we're going to increase free float for some of these companies, but you need buyers for that. So then you say, listen, let's say you have a company, it's a large company, it's mostly owned by a few people that are the founders of the company. Yeah. They say, okay, we're willing to sell to 20% so that everything is freely in the market. You need a buyer as well. Yeah. So where is that buyer going to come from? And I think what Indonesia could do, or Southeast Asia, is to look at what India has done. They got these SIP, systematic investment plans, whereby a lot of people can actually buy easily, even for $0.50 or $1, you can buy stocks on sort of ETF, a fraction of an ETF. You could therefore get liquidity in the market from the local market as well. And I think that would be good for Indonesia to consider, because then you have a buyer in the market and it allows you to sell some of these stocks, increase the free float. That would be a very healthy sort of situation.
Harold, great to see you again. That was Harold van der Linde, head of Asia Pacific Equity Strategy at HSBC. And we're just getting some more context on the LME delayed opening, or said to have delayed their market opening this morning. We're actually getting some commentary from traders who are saying it's not clear when the market will start to trade as well. Again, just going back to the reason for this, what we're hearing is that technical issues are behind this reportedly delayed opening this morning. But of course, the metals market has been one of the most tracked areas of assets so far in 2026. Huge rallies across the board.
Nothing to see here, quite literally. We're also looking at New World here. So we talked about this. Blackstone is set to be in talks to become the largest shareholder there, and New World shares are up 5.6% in the pre-market. Something to watch, of course, as we go into the session today. And this is just to also underscore the broader rally we've seen in the Hang Seng Property Index, and the cohort of stocks has been hitting new highs. Separately, on reports yesterday that 3 red lines on Chinese mainland property, conversations around that have also led to the massive move in mainland property names yesterday. So those are 2 real estate stories we'll track going into the open today. Apart from that, it seems like pulling back a little bit from the 28,000 milestone on the Hang Seng Index. But yes, lots to discuss as we approach the final session of the week, just over 3 minutes away, the opening bell. This is the China Show. Good morning.
Downloaded it, answered some basic questions, and it saved me from paying $121 a month for car insurance to $57. Click of a button like that.
I got that quote.
Right, good morning, happy Friday. Welcome back to watching the China Show. 40 seconds to the opening bell. We've had a ton of breaking news in the last, let's call it 90 minutes or so. The latest coming through, this concerns this massive commodities boom, and the London Metal Exchange is said to be delaying the market opening. It's said to be down to some technical issues, and it's not clear based on our queries with traders when the LME market will open up. I promise you we will get you the latest once we have more information. That's a massive story, but apart from that, there's an equity market that is opening up, of course, in about 5 seconds.
5 seconds.
There we go.
All right, we're bringing you into the open this morning, and mainland Hong Kong session just about to open today, and we just actually got a call out from Morgan Stanley. They're saying that the first quarter support will remain moving forward. They're seeing it sustaining essentially for A and H shares. This is from Morgan Stanley, of course, but their sentiment indicator for A shares improving modestly, remaining still within that normal range. But they're saying that essentially housing is really the material drag on nominal GDP, but it should narrow as that adjustment tapers as well. Today, you've seen the market session. It's a little mixed so far, but mostly to the downside as well. Let's take a look at what's happening in Hong Kong, because that market just coming on today, I think it's very much going to be focused on that tech story, because you're seeing tech sort of being the overall drag on the benchmark so far of 0.8%. Some of the names we're watching in particular, this is very much an Apple story as well, because you've got Xiaomi, for instance, off 1% so far, but actually an interesting cut from Citi as well to their price target for the stock to $43 Hong Kong a piece. That's off from 50 Hong Kong that was earlier in place. So Apple earnings, of course, one of the big movers in the late trading session today. Let's take a look at some of the suppliers, because very, very strong quarter for Apple in the period.
Solid.
Mark Gurman really said this was blowout numbers, essentially. Very strong demand for particularly their more expensive smartphone range, or the upper end of the range as well. But we're seeing really strong demand in India, China as well for its products. Again, that could be playing into the Xiaomi story, of course. Sunny Optical, one of the suppliers to that, they actually had some preliminary full-year net income figures. You're seeing growth there of 70% or 70 to 75%. That's what they're saying for the business. But let's also take a look at CG Mining this morning as well, because we're taking a look at how that stock is under pressure essentially, but they have priced a convertible bond at 63.30 Hong Kong dollars a share. We are seeing again that stock just a bit off, and then New World as well. This is a very interesting story. So obviously New World, we know it's faced a lot of challenges around its debt levels. We're now hearing that Blackstone could be in talks to become New World's top shareholder. That stock is surging as a result. China property, just to mark as well, because this was a big story yesterday, that we had local media reporting in China that the so-called 3 red lines could be removed or be no longer applicable to these developers. We did see a huge rally off the back today that's giving up some ground, but at the same time, I think actually Bloomberg Intelligence had a really interesting take on this, and maybe we need to sort of fade the significance of this one as well.
You know what? On that note, why don't we get into that right now? Christy Hong is with us right now to give us their reaction to this. Christy's here on set with us. So what was the initial take?
Right. So I think the move is actually symbolic. When it comes to the 3 red lines rule, dialing back on it won't fundamentally change developers' operations. This will ease the most pressing pressure that developers are facing nowadays, which is falling sales and falling home prices. And the intent of the rule when it was introduced in 2020 was to cool the overheated land market by reining in the over-leveraged expansions by developers. And fast forward, since the crisis, developers have been passively forced to deleverage the balance sheet. So in a way, these 3 red line metrics have been irrelevant, and investors have not been closely looking into them.
Okay, so then what are you watching for the property market, and do you see any sort of signals that we're going to see any sort of recovery, or what is the outlook for you this year?
Right, so I think from a policy standpoint, there are fewer and fewer levers that the government can pull. When it comes to, these policy options, I think I've said again and again, what tools that can be used have been used, with 5 years in the crisis right now. And, tier 1 cities, there's still some leeway for, say, Beijing, Shanghai, Shenzhen to remove their home purchase restrictions or lower the down payment ratios. The rest of China, what can be done has been done. So I think what we are most concerned is about the structural issues that I've always talked about, oversupply of the market, the pessimistic home price expectation of the general public, the developers' liquidity issues, and the problem of unfinished homes. These are still not going away, and these won't be easily fixed by policy alone.
I guess this is a too broad a question, but generally, where do these developers stand in as far as being able to comply with the 3 red lines?
Right, so with the developers that we have spoken to, they said they've already stopped filing these 3 red lines metrics in 2025. So this is not new. And then you also have, basically 2 camps of developers. The offenders, like Evergrande, Sunac, they've already defaulted. And then you have the compliance one that they have been compliant before, they're still compliant now. So in a way, the rule has already done its job.
Okay, Christy, thank you so much. Christy Hunger with the latest take on, massive market reaction yesterday, so we'll see what the session holds today here. Staying on property, one stock that is actually quickly eroding the initial gains, but still quite up substantially though, 3.7% at 11.54. That should still put New World shares at the highest since 2023. I'll correct myself if that's inaccurate at this point in time, but that seems to be still the case. Let me give you a stat on volume. So on a normal 30-day average, daily volume on New World gets you to about 16 million shares. In the opening 5 minutes, we're already at 10 million. So there's a lot of interest in the stock today, given, of course, that Bloomberg just talked about early on with Blackstone in talks maybe to become the largest shareholder.
Yeah, great reporting from the team. We'll get more on that ahead. But in the meantime as well, Hang Seng Investment Management has officially launched its new gold ETF on the Hong Kong Stock Exchange. Of course, we were covering this yesterday in the session. But to talk us through the launch and the company's broader business strategy, let's bring in Hang Seng Investment Management CEO Rosita Lee joining us this morning. So thanks very much for taking the time. What did you make of the trading debut for the ETF, and what's demand looking like? What's the outlook like for you as well on that?
Well, actually, we are very excited to have the gold ETF listed yesterday, and we received a very strong demand in terms of turnover, and the turnover actually on the very first day already exceeded 100 million Hong Kong, and the AUM actually doubled. And the reasons of why we launched this gold ETF is mainly due to the growing demand of the local Hong Kong investors in physical gold. And actually, they would like to have a more flexible and accessible gold investment solutions. And then we come to the idea of providing them a trading flexibility while at the same time provide them with a solution in case they want to redeem their gold physically. Yeah.
How does that work? They want to get the physical bit. What are the mechanics to be able to do that?
Well, for that, it's pretty simple and straightforward. And of course, if the customers want to redeem in gold, then they have to do it in the primary market. Directly through selected broker and not in the secondary market, because for secondary market all settlement will be in cash. Okay, so if they are interested in redeem their holdings in gold, then they approach their designated broker, and then they will arrange it directly with the fund manager, which is Hang Seng Investment, and then we will decide which is the best way for them to receive the gold physically. And for those investors who are also Hang Seng bank customers, then they have the privilege to redeem or collect gold at the Hang Seng's headquarters. And to meeting that redemption requirement, then the minimum redemption unit will be 250 unit. Yeah.
Okay.
And or the multiple of it.
The structure of that and how you can redeem physical gold, does that tell us that this is an ETF that's been designed more with a retail customer in mind as opposed to an institutional investor? And second to that as well, what are the sort of inflows that you're targeting for this?
Okay, that's an interesting question. So actually, when we first have the ideas in mind to develop a very different gold ETF in the Hong Kong market, because there's already some other gold ETF already available in the market. We are targeting not just individuals investors, and not just the private banking or retail customers, but also the institutional investors or even the sovereign fund, because we have the gold stores exactly 100% in Hong Kong. And the another unique selling point of this gold ETF is that we have all the trading, settlement, custody, and redemption all settled in Hong Kong, utilizing the infrastructure that Hong Kong already have for gold trading. So even for institutional clients, they might have a huge demand to store or hold physical gold. Then now they have a more flexible solution instead of storing the gold physically by themselves, which is quite troublesome or costly. They can now just simply invest into this product. So the product also we are going to issue tokenized share class as well. So to answer your questions, we're targeting different background, different types of gold investors and institutions.